Hi, welcome to our channel again. Wanted to talk right now about the reason that your LLC should go to an S-Corp status. This is very controversial for a lot of us in the accounting and tax world, so I want to dispel some things that young entrepreneurs, early business owners don't understand and may be misguided by a tax professional or CPA who doesn't care to explain because they expect you to know. So, you got your LLC. That's great. That's a limited liability company. That's not a corporation. It's a company. So, all that means is that you want your business interests to be separate from your personal interests so that if something went wrong, like say someone sues you, they have a very difficult time getting to your home and other personal assets to take should they win a lawsuit. So, this is where it gets kind of tricky. Your LLC, if you're making a lot of money, we want you to go to an S-Corp status. And the reason for that is because there's some extra tax protections that you don't have when you're a younger LLC filing as a Schedule C, like a small business. So, the reason to go to the S-Corp status, in my practice, it's a general rule of 500,000 or more in gross annual sales. That's kind of the tipping mark because below that, it's going to cost you more than it's going to save you. And when these other professionals try to they tell, I had this happen to a client recently. The CPA was doing what they thought was best and advised and signed this business up for S-Corp status. The owners didn't quite understand what all that meant. The CPA didn't fully explain it. So when they came back to me, because I do their books, so they come meet with me a couple times a year. And when we got together for our regular meeting, they showed me the letter they got from the IRS accepting their S-Corp status. And I said, when did you do that? Because we needed to be doing payroll for you. There are some rules that go along with S-Corp. CPAs and other tax advisors will tell you, yes, you're going to save 15% on your tax base if you go S-Corp. That's true to an extent. The misconception is that 15% goes back in your pocket, that you're just going to save it every year and it's going to go in your pocket. It does not happen that way. That is not what happens. The 15% is Social Security and Medicare and the Social Security and Medicare match. Because once you become S-Corp, the owner has to do payroll on themselves. And if you're not an S-Corp, you cannot do payroll on yourself. You can draw a check out and it's owner's draw off your owner's equity, but you cannot do a payroll check and have payroll taxes withheld unless you're at least an S-Corp. And by at least, I mean the next step would be full-blown corporation. So, or get a partner and file a form of partnership. Then you could, there's some different change of rules there. That's a whole different thing from just a single member LLC wanting to go to an S-Corp. That's a different video we'll go over a different time. Right now, the 15% rule, that doesn't go back in your pocket. You get that when you retire. When you start drawing Social Security and Medicare, that's when you get that 15%. You don't get it now. But the benefit of doing payroll is you don't have to then do your as much to your own personal retirement funds because you're doing it by paying in Social Security and Medicare and paying in more tax against your tax liability for your business because you're drawing payroll and paying your taxes. I strongly suggest that you have additional federal and state withheld to alleviate some of those excessive estimated quarterlies you've had to make in the past. Doing the payroll can reduce that. And the fees for running payroll, which include the matching Social Security and Medicare, you would then have to have workers' comp, if you don't already have it, workers' comp insurance. You would have to sign up for unemployment. Now, in some states, in Michigan is one of them, one owner can be exempt from Michigan unemployment. So you could avoid having to pay that if you wanted to. I want to caution you, we've recently learned, all of us have learned in the last few years, that If you had been one that went ahead and paid your Michigan unemployment, and if you're not a construction company or a high-risk company, the starting unemployment rate is 2.7% of up to $9,500 in wages per year, which works out to be $256.50 per year on yourself. And if we got another pandemic and it shut you down, you could draw the maximum Social Security potentially, or I'm sorry, maximum unemployment potentially by paying $256 a year and not have to worry about what are you going to do when you can't run your business for 6 weeks while the world's shut down again. So I caution against stepping away from that at that small cost to put yourself into it. That's a good thing to get into. The other tax that comes along is federal unemployment, which is 0.6% of the first $7,000 per year, which amounts to $42. You don't get a choice on that one. You have to pay it. There is no opting out. You pay that one. So there are some additional costs, but all of those costs are write-offs. And in a lot of cases, you also then have to pay for a payroll subscription and someone to prepare those payrolls for you. If you're capable of learning them, you can learn them yourself. You can hire someone. You can contact ADP. You can contact ConnectPay or Gusto or any of the other ones that do payroll services for you, and do that. You're absolutely welcome to. But that is the big thing about LLC S-Corp status. 15% doesn't go back in your pocket. It goes in your Social Security account. That 15%, you still pay it out. It doesn't stay in your bank. It still goes out. But it does reduce your tax liability. So, and paying yourself payroll reduces your tax liability because it's an expense. It's a valid cost of good expense. So don't be afraid of it, but beware until I've kind of averaged it out going, unless you've got a high liability, like myself. My company isn't at $500,000 per year yet. We'll get there someday. We're still, my office is still fairly new in the public scene. So I decided to go S-Corp for a couple of reasons. My liability is high. My husband and I have a couple other businesses. I didn't want to run the risk of any of the businesses coming back to our personal assets or to the bookkeeping tax business because they're all owned by me, us, whatever. So I went S-Corp for the additional protection and separation of that business liability to anything personal or other businesses we have. Doing a business that is taxes and bookkeeping is a high liability. My insurance is quite high. You have not only general liability and umbrella and workers' comp, but you also have errors and omissions just like any other CPA or law firm or doctor's office. We all have to pay errors and omissions. Malpractice, basically. Another fancy word for malpractice. So unless you have a liability risk, my general suggestion is wait till you get the $500,000 mark. Then we're going to talk about, are you going to stay there? What's it looking like? What's your forecast? What's your expenses? If your expenses are pretty high, you may not want to go there. You might want to have a higher threshold before you hit that. The reason to do it is to cut the tax. To cut the tax, you have to do payroll, which has additional expenses. And if you're not prepared for that, it can be surprising. So, S-Corp is a good idea for the right ones. It's a good idea at the right time. Don't jump into it ahead of knowing what's involved. Thank you.